What's up guys, Ben here and welcome to Motivation to Invest. Kevin O'Leary is a Canadian businessman with a net worth of over $400 million. He's most famous as being the TV shark on the hit TV show Shark Tank, where he is an investor and he invests into startup businesses. He's known on that show as the tough guy who spits the cold, hard truth. But what many people don't know about the great Kevin O'Leary is that he actually runs an investment firm with a variety of ETFs. Now, for those of you who don't know much about Kevin O'Leary's investing style, he loves technology and he loves dividends, two things which may seem like polar opposites, but Kevin O'Leary has found a way to marry them together in these ETFs. So in this video, I'm going to deep dive into Kevin O'Leary's Oshares ETFs and reveal the top 10 holdings in 3 of their funds. Right guys, before we get started, if you appreciate valuable videos like this, then feel free to give the video a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you want investing tips and exclusive stock picks, which I'm personally investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into these ETFs. So here we are, we're on Kevin O'Leary's Oshares ETF investments. So he's got 4 here. He's got OUSA. So this is a US quality dividend ETF. Kevin O'Leary loves dividends. He loves those dividend checks every single month. So that's an interesting fund. We're going to dive into that in a second. He's also got the OUSM, the US small cap quality dividend ETF. And then he's got an OGIG, Oshares Global Internet Giants ETF. So here we are, we're on OUSA. And I think the best way of explaining this is first, let's have some words from Kevin O'Leary.
Hi, I'm Kevin O'Leary from Shark Tank and chairman of Oshares ETFs. Many people ask me about investing and the ETFs I have in my portfolio. Here's how I invest in US large cap stocks. OUSA, an ETF with over 100 large cap quality dividend stocks. It has given me great performance and dividend income. I don't want all the 500 biggest companies, just the higher quality companies. So I own OUSA.
The expense ratio on this is something that you always need to look at when investing into any ETF because they're not free. And that is one difference to investing into individual stocks. So the expense ratio is 0.48%. So that is a number that you'll have to pay each and every year. So let's look at the monthly performance and the yearly performance. So over 1 year, 0.71%. So 3 years, 7.12%. 5 years, 9.09%. I think that's since inception, 57.41%. But remember guys, so this performance doesn't seem incredible, but this is not including all the dividends which you'll accumulate over time, and that is what this fund is about. So let's look at the top 10 holdings. We've got Microsoft Corp, MSFT. Now I believe Microsoft is definitely one of the greatest companies of all time. It has one of the most stable share prices I've ever seen in my life. It's a technological giant, but it also pays a dividend, which is so surprising, and not many technology companies actually do this. They've recently been moving a lot more towards the cloud with their Microsoft Azure service, which has the second largest market share in the cloud market. They also have their Office 365 platform, which is available on the cloud. So they're really diversifying into a lot of different areas, and I think Microsoft is a great company for the long term. So that makes up 5.3191% of the portfolio. Then we've got Home Depot, consumer stores in the US, Johnson & Johnson. Now that's been a fantastic company, both in terms of dividends and in terms of the diverse product range that this company has. I actually read an article on Johnson & Johnson and their return on invested capital is sky high. So when they noticed the skincare market for their products being saturated in the female market, they diversified into the male market and released a variety of products and got great returns for shareholders. They also pay a nice dividend. Then we've got Procter & Gamble, we've got American Co, Verizon, Pfizer, Apple, fantastic Apple, as we know, new iPhone coming out, United Health Group, and Cisco Systems, a legacy tech giant. So I call these companies the blue chip stocks of America. I'm surprised Walmart's not on there, to be honest. Now let's dive into the OGIG ETF. This is the Oshares Global Internet Giants ETF. Now this one is my favorite, to be honest. This is one that I really like. This has an expense ratio of 0.48%. This is a rules-based ETF designed to provide investors with a means to invest in some of the largest global companies that derive most of their revenue from the internet and e-commerce sectors that exhibit quality and growth potential. So that is something we love on this channel. We love e-commerce, we love growth, we love quality companies, and this ETF has them all. So diving into holding number 10, we've got Amazon. Now, Amazon is a fantastic company, arguably the greatest in the world. They have their powerful and popular e-commerce service, Amazon.com, and they have Amazon Prime, which I believe is nearly 50% of the US population right now. They've also diversified into Amazon Music, they've got Prime Video, and let's not forget the elephant in the room, Amazon Web Services, which is the #1 leader in cloud services. So Amazon is a fantastic company ran by the great Jeff Bezos, who I believe definitely is one of the greatest CEOs of all time. I love his motto, which is it's always day one. And he runs his $1 trillion business as if it's still a startup. And that type of mentality from a CEO, one that has skin in the game, one that's a founder, is something that all investors should look for because they have allegiance to the company. Holding number 9, we have Alibaba Group, which is another fantastic company. This makes up 5.18% of the portfolio. Now, many called Alibaba the Chinese version of Amazon. So it does similar stuff. They've got the e-commerce. They've also got Alibaba Cloud. They do business-to-business services. Alibaba is a fantastic company. It's definitely one of the safest Chinese companies to invest into, as many institutional investing firms are invested into this stock. Ran by the great Jack Ma, another fantastic founder. This guy started off as a tour guide, giving people tours around China, around the Great Wall of China. And that's how he learned English. And then he went and started this fantastic company and grew it to where it is today. Then holding number 8, we have Tencent, another fantastic global mega giant based in China. Now, I've done plenty of videos about investing into China, and I believe everybody should definitely have at least some of their portfolio in this giant. China has the world's largest population of 1.42 billion people. They have a growing middle class, and they've been one of the least affected countries by this whole global health crisis. This means China is primed to take over the world. And as investors, you can be a part of that gravy train. Now, Tencent is involved in so many different areas. They've got WeChat with their social networking. They've got QQ. They've got entertainment platforms with QQ Music. They've got information technology. They've got software tools. They've got lifestyle and daily services. These guys are everywhere when it comes to China. On to holding number 7, and we've got Alphabet. Now, I've mentioned Alphabet many times on this channel, the parent company of Google. Alphabet is an incredible company, and I often say it's overlooked by many investors. Everybody's focused on Amazon, and they're forgetting about little old Alphabet. Except one thing's for certain, Alphabet is not a little company. The company's worth over $1.1 trillion in market cap, and they run a variety of services. They are the leader in internet search, as you know, with Google. They run Android, the popular operating system on phones. They have Google Maps, they have Google Earth. They have Waymo, the autonomous driving service. Fantastic company. They have a great balance sheet, and they're continuously investing into innovation and growing. They have a lot of products as well. They have Google Home. They have Google Pixel Pods. On to stock number 6, and that is Facebook, the leader in social networking. As you know, they've got Facebook, they've got Instagram, they've got WhatsApp. This is a global mega giant. They have the second largest market share when it comes to online advertising. Fantastic company. And what I love about this company is they have a great CEO, Mark Zuckerberg, the founder. He's continuously innovating. He's continuously pushing the boundaries of the company. Facebook's introducing a dating service. They're introducing Facebook Shops. They're introducing augmented reality services. They own Oculus Rift, which is the leader in virtual reality. So this company is definitely growing massively still. It's still growing at, I believe, around 20% compound annual growth rate on the revenue. So it is a fantastic company to be invested into. Then we've got Mito. This is a Chinese shopping platform. They're locally found consumer products, retail services. They have entertainment, delivery, travel, and many other services. So this is a great company in China. Also another tech conglomerate. And now onto my top 3 stocks in the Oshares OGIG ETF. We have Pinduoduo. So this is a fantastic company. The best way of explaining this is another Chinese tech conglomerate. but I call them social commerce because they're basically a combination of, say, Amazon and Facebook. So imagine you've got the e-commerce side of Amazon, but the social networking side of Facebook. So basically the way the website and app works in China is you log onto it. Let's say you see a blender which you wish to purchase. You can then send this link to all your friends. And let's say 5 of your friends purchase the blender together. You'll all get a discount. Now, this is fantastic for many reasons. It's fantastic for the business because this sharing of information boosts sales on the platform. It's fantastic for the business sellers because they sell more products in bulk. And it's fantastic for the customer because the customer is getting great deals and socializing with their friends. So when I see companies like this that are a win, a win, a win, then definitely I want to be invested into them. And Pinduoduo is another stock which I'm invested into. ARK investors also invested into this stock, and I've done a full analysis of it because I do suggest you don't just take this little brief introduction of the company before investing into them. Definitely check them out. I have a full analysis. I'll leave a link in the description below because there are many risks with Chinese companies, and that does need to be stated, especially political tensions, US-China trade relations. The Chinese government is heavily involved in some of these tech stocks. So definitely check out that analysis below. Now on to my top 2, we have Zoom Video Communications. As we say, we're in the Zoom economy now. People are working from home. The work from home trend has been accelerated and people are on Zoom all the time, constantly. I've used the service myself. I've compared it to many of the other video conferencing services and Zoom is still the best. The stock has run up massively this year, but the company is still a great stock. If this global health crisis tends to go on for a lot longer, this company will continually benefit. And now stock number 1 on my list is Snap. That is Snapchat services, which makes up 2.38% of the portfolio. Now Snapchat, I'm not a massive fan of this company. I do believe it's an overlooked social networking company. I used to use them a lot personally, but what I found was the great management at Facebook, or let's call them the strategic war mentality management of Facebook. They noticed that Snap was being very innovative. They were coming up with new ideas. They had their stories. They had the animations, the augmented reality, dog ears, etc. that people had on their faces. So Facebook, the parent company of Instagram, said, okay, we're going to create Instagram stories. And they basically just copied the entire Snapchat platform. When I saw this myself as a consumer, I thought to myself, well, I'm not going to spend time updating my Snapchat, updating my Instagram story. It just takes too long out my day. And Instagram, I noticed, got a lot more engagement. So that's where I decided to use to update my story. I still know some people do use Snapchat, but to me, the unique selling proposition of the company is no longer. Although the company may still appeal to a younger crowd or those that don't want their stories to be on Instagram or Facebook. So there could be a market there for the company still. We'll see how this one plays out. It's not a stock which I'm personally invested into. So what are your thoughts on Kevin O'Leary's Oshares ETFs and which are your favorite stocks right now? Comment below and I'll join in the discussion. And if you guys found some value in this video, feel free to give it a big thumbs up. That really helps out tremendously with the YouTube AI. And if you want more investing tips and exclusive stock market picks, which I'm personally invested into, then definitely go ahead, subscribe to this channel, turn that notification bell on. With that being said, I hope you guys have a fantastic day and I'll see you in my next video. Invest safe.